We just have an interesting question here from a subscriber asking whether it's true that the Forex market can be manipulated, and if so, how does it work? So, yes, it is unfortunately true and possible for some of the big players or big market participants to manipulate the market. But the good news is that the size is usually so insignificant that you might not even notice, and it shouldn't really affect your trades. Now, does that make it okay? Of course not, but there isn't much we can do about it as a retail trader apart from just trusting the regulators and the authorities to do their jobs and ensure that these type of things doesn't happen. So, how can the market be manipulated? Most commonly, it's manipulated at the London fix, which is 4 p.m. London time. Now, at the London fix, there is a 60-second gap, 30 seconds before 4 p.m. and 30 seconds after, where the benchmark FX rates are determined or fixed based on all the buy and sell transactions that occurs at the time. So obviously, there's going to be big companies that wants to make big transactions at that time, and they use that 60-second gap to basically fix the exchange rates for all of those type of transactions. Now, institutions are privy to their own clients' pending orders that needs to be executed at the fix. So imagine that you're an institutional trader and you have a very large company as a client, and the company wants to exchange £5 billion for dollars in order to, buy salaries or do a transaction with another company, whatever the reason might be. Now, the manipulation occurs when these institutional traders, the ones that needs to make the trade on behalf of the company, when they start to tell their buddies at other institutions that there's going to be a massive order for the pound US dollar going through at the fix. So what they can then do collectively is place sizable orders of their own before the fix. So they know that the huge order at the fix will have the potential to move the pound US dollar pair. So they can position themselves ahead of the fix. And when the actual order of the client gets executed, the market slips lower. Of course, on their own, they might not be able to move the price. But if you have a couple of institutional traders all joining in the party, placing 100 million pound orders, selling the pound US dollar, all those orders getting executed before the fix can cause the price to edge lower. So when the fix is made lower, the order of the company pushes the rate even lower than it was. Now, that means that the company gets a much worse fill than they could have had without all of the manipulation. And the institutional traders simply close out their trades afterwards, and they make a nice little profit from that boost to the downside. Now, a couple of big bank traders were actually caught out doing this back in 2015. And even though regulations has increased and regulators now know what to look for, I'm sure these type of things are still going on everywhere in the system. The good news for us as retail traders is that these type of things are mostly occurring at the London fix, so we can be prepared for that. We can be prepared for 4 p.m. for potential volatility in the market, which means there's less opportunities for traders to capitalize on those type of moves since regulators will be watching. And apart from that, the moves won't be 100 pips, right? So if you're placing a 200 million pound order to sell the pound US dollar, just pushing it lower a couple of pips already earns you great profit. So the type of moves that occurs from these type of manipulations are usually so small that it won't really affect any of your trades as a retail trader. So you don't need to be concerned with it from that point of view. So as we said, yes, it's bad that these things happen, but the good news is that we don't really need to be worried about it from our own trading point of view. But it is good to and worth knowing that these things do exist. But yeah, good news is it won't affect us too much. The size won't really affect the trade 100 pips. So from a retail point of view, we should be safe with regards to these type of manipulations.